when we decided to do it, Brendan and I were sitting there like on a loading dock outside of our building. We're like, we're going to do this. We're going to buy back control. We're going to take control of our business. We're going to get profitable. We were still losing $300,000 a month at that moment. And that there was like our time to live was limited because we had limited cash in the bank. You would think it would be very stressful, but the second we made the decision and we knew what we were going to do, we believed in ourselves and the stress went away.
Welcome. This is Second Acts, a podcast where we document how SaaS leaders chart the challenging, chaotic, and ultimately foundational second acts of scaling up organizations. And I'm your host, Krish Subramanian, co-founder and CEO at ChargeBee. In this episode, I had the pleasure to speak with Wistia's co-founders, Brendan and Chris. Having founded Wistia back in 2006, a mere 6 months after YouTube, they have not only scaled it to 350,000 customers in the competitive video marketing space, they've also crafted among the most refreshingly creative SaaS brands. In 2018, in the wake of a humbling realization, as Brendan calls it, they took on $17.3 million in debt to buy out their investors. An incredibly rare decision. And rarer still was how well they diagnosed and openly wrote about what they had got wrong before this, despite all the growth milestones they had achieved and what they wanted to fix. That decision marked a decisive Act 2 in their journey. We talk about what led them to it, overscaling, how they went from shipping 12 to 74 product updates in a single calendar year, the exec hiring traps they fell into, and how they recruit today, why 18 years into the space, they feel like they are just getting started, and a whole lot more. Dive right in. And if you like this episode, don't forget to subscribe wherever you get your podcast. And if you really like the conversation, drop us a review. I would really appreciate it. Thank you.
I really appreciate both of you taking the time to speak with me.
Of course, thank you for having us.
We were just talking before this and saying that there's not as much out there in terms of content on this, like you said. It's kind of it can be a lonely journey going
Right.
In the scaling phase.
And there's also so many people issues, like as you grow, right? Like you need teams and people, you need to hire people, and basically no one talks about any of that. So it's like the thing that so many executives are thinking about, I think, and teams who are scaling is like one of the things that people don't end up talking about that much.
Right. And there is no particular, there are no playbooks, right? There are only plays that we can borrow from many others, but we have to put it in context for ourselves in terms of what could possibly work. So yeah, very excited about this podcast. Thank you. So I'll start with something that you had mentioned long back in 2018, which is we had overscaled, right? This just doesn't get said enough. And we all went through a major reset. We went through it at ChargeBee as well in 2022 to look at where all the bloat is. And it doesn't get articulated with the same level of understanding as you did back in 2018. Can you take us back to this moment? It'll be very timely for the current moment in SaaS.
Yeah, I can start and then hand over to Brendan. So basically, what we wrote about in 2018 was this buyback we did for the company. So we raised debt to buy back control of our own business. But the reason that happened actually was because we had an opportunity to sell the company. And we had 3 different acquirers who came in, talked to all of them. We're, as many SaaS companies, people poke around all the time, investment bankers reaching out, different companies. And we were always like, no. Like, we're not interested in selling. But this time we were interested. And so we got into the conversations and we actually felt like very close to doing it. And as we were deciding what we would do once we sold, it seemed pretty clear that we would leave this acquirer after a couple of years. Their founders told us that. They're like, there's no way you're going to be here 3 years later. Like, this is your entrepreneurs. We've done it too long. And they were right. And so we said, what would we want to do? And we started talking about like, well, Brendan and I feel like we have a very unique partnership. Like, we're best friends. We've been best friends the whole time, but also we have really complementary skills. Like, we solve problems really well together. So we're like, okay, we'll start another company together. And then we thought, okay, what space should we get into? And we have been in the video space this whole time, and we felt like there's these huge changes happening in the video space. Like, all right, okay, we know this space, we're going to get back into it. Who should be our customers? Well, we love serving SMB. We feel like they're underserved. We want to do it really creatively. We want to do it and take a very long-term view. And it was this process of actually getting ready to like sell the company that made us realize that actually we were both, the reason we were considering selling was because we were unhappy. And we were unhappy with where the business had gotten to. And actually we felt like we were failing. And I know that normally, you know, the goal for most people is to sell. But for us, we felt like at this moment, if we sold, we would be giving up while we had all of these problems. And that was like the key moment that made us figure out that the problems existed. And then once we realized they existed, we realized, hey, we can actually solve them. But it was kind of like just trying to set the stage. It was this, when we talk about overscaling, it created these problems. And maybe Brendan, you can talk about like what went into that.
Yeah, well, one other funny thing on that is kind of embarrassing to admit is, like you were just saying, Chris, it's like we were talking to someone who was a kind of a friend and advisor. We were talking when this was happening, we're reaching out to all kinds of folks for advice. And then short story, it's your own decision, right? So, you know, like you just said earlier, Krish, you know, you can hear what everyone else has to say, but it's ultimately your decision. And someone said something that was really interesting that stuck with us, which is like, hey, just so you know, if and when you sell your company, and this is someone who had sold their company, you'll have a boss, and that boss is going to look at your business and say, okay, here are the problems, and guess who needs to fix them? Like, you need to fix them. And so this person sold his company, and he was kind of aware, like Chris said, he's like kind of aware of the problems, but you're not really facing them down, or don't feel like for some reason, you don't have agency to solve them, even though you do. And you'll sell your business, and then you'll fix your problems, and now your business will be much better and much more valuable. He's like, if I could rewind the clock, I would have just faced those problems and fixed them. And the thing that's embarrassing to admit about that is, like, of course, you're like the founders of the business, you're the CEO of the business, you have agency, of course, to change your business. But like in that moment for us, where we were really like having to face that moment of, we could sell it, and then, oh wait, we'd have to solve these problems, but it would be for somebody else. We're like, wait a second, we could just, you know, we could face this down and solve it ourselves, which was, beautiful. I'll say, a humbling realization.
Yes. And but the problem that we had kind of created for ourselves is that we'd actually been growing pretty quickly. I think the year when we started to get this advice, we're growing about 80% a year. And we hit 10 million in revenue, and we had 3 million in EBITDA. So we were thinking back then, wow, we're pretty good. Like, that's what I thought. Oh, look at us. Like,
it's an interesting
but honestly, but it's funny because everyone we talked to was like, oh my God, if you're this profitable and you're growing like this, like you're making a big mistake. Like, you should be investing way more in growth. Just imagine how big you would be. Like, and companies are valued based off of the revenue. Now, in the revenue growth, and we didn't have any venture capital. So we've never raised venture capital. We just had angel money. So it was like, oh, maybe they're getting better advice than us. Maybe all these other people are right, we're wrong. So we start questioning ourselves in this moment of us being really successful. Like, imposter syndrome comes in, right? It's like, well, there's no way we could actually be this good. We're actually bad, is what we thought. And so then we started trying to grow much faster, even though we're growing fast. We started like hiring way more people. The shortcut to like all of this is basically someone would have an idea for something new that was exciting, and we would greenlight it. We'd hire a team to do it. And the way things worked until this moment and how we were growing fast and being profitable was that it's not what we did. Like, if someone had a new idea that seemed like a good idea, we'd say, well, can we add this onto something we're already doing? Is there some clever way we can add on to something we're already doing? Is there something we're doing that isn't working that we should stop? That the person running it might be great and they should take this new thing? We just lost this rigor. And so we greenlit everything. And of course, actually externally from when this first started, we got so much praise. It was crazy. Because, you know, you'd go to events, oh, you guys are launching all this stuff and you're putting on these conferences. It's like, yeah, it feels so good. It feels so good. And, you know, the talking about how big the team is like another thing everybody does. We just grew our team so much. Oh God, like, it's really exciting. And so we were getting all this positive reinforcement. But what ended up happening is we ended up with many projects that were going at the same time that I would describe as like zombie projects. They were like kind of working. They were lumbering along, but they weren't crushing it. And they're actually distracting us from doing a lot of the most important things. And so if you talk about overscaling, that's what we mean is we had too many things going on that were not actually important, or even if they were, they deserved more focused and a more long-term view. And so so when we decided to do this buyback, what it meant is it was going to force us to be profitable because we raised debt to fund the buyback. And Brendan and I looked at that and we're like, this is going to give us the rigor we need to actually like be focused. And
Beautiful.
our bet was if we're actually focused, the company will do much better. And the cool thing is like that came true. So raise the debt, force ourselves to be profitable. Our revenue growth at that moment went up, like increased. The revenue growth rate increased. And we had a huge swing in EBITDA. And it was kind of this moment where we're like, wow, you really can be profitable and grow. And sometimes that is the best way to grow.
Beautiful. Beautiful. I am so tempted to want to ask so many questions about the scaling part of the journey, but you realize that the most important one, when I reflect back, even the last few years of our journey, one of the most important moments for one of my co-founders and myself is we were going through joint coaching, and that reflection exercise where because you're in the middle of so many problems, your mind is always obsessed about what's broken in the product, what's broken in like every decision that you've made that sometimes can make you unhappy. And then this moment of what you're talking about, I'm able to resonate with it, but it feels like you came to that moment of clarity during a time of that critical decision, that moment of clarity came through. For me personally, it was mainly leadership coaching, where there is this particular framework that they talk to you about. Okay, almost every decision how do you own the moment to say, okay, you can actually you made all the decisions, but don't blame yourself for all those past decisions. But how are you able to think about you can create the future that you want, right? And it's an interesting framework, but it's fantastic. Great to learn this. Thank you. I have so many follow-on questions related to this, but I also want to skip to the 2022 and products. There is so much happening in the market. And you said in 2022, we had 12 products that we published to the world. And in 2023, we had 74, more than a 500% increase. Same size team. And you have continued to emphasize the importance of both speed and creativity, two notions that are often pitted against each other. So love to hear how you see them together as essential culture markers at Wistia and as drivers of growth.
Ooh, this is a juicy question for us. So we around, I don't know, it's 2020, we changed our strategy, which from the outside probably isn't a major shift. It was a big shift internally where we for the longest time we were a point solution focused on helping marketers host video. This is a little bit of a long way to get to this. Marketers host video on their website and track who's watching. And then we realized that the market really, what customers desire, what the market wanted is an all-in-one video solution. They wanted to create video, host webinars, host live video, be able to edit video, manipulate audio and video content in a single platform and do all this. So that was going to be a big product lift for us. That was going to expand the product footprint a lot. So we decided to invest more into the business. And like Chris described, we were running the business profitably, right? So we're going to run it less profitably, but make a big investment. And so in 2021, we started hiring pretty aggressively and doubled our product design and engineering teams. And I don't need to tell you that it takes, just hiring more people doesn't translate into more product and more efficiency. It takes a lot of time. And one of the things that we did that was successful is when we did that, we set about to make a cultural change, or really to focus that group. And we said, we really are going to optimize for pace of improvement in the product over everything else. And that has been really successful for us. But one thing that keeps coming up internally, and it is this question that you have, like it comes up internally more of like speed and quality. Is there a trade-off here? It's like we need to make a really high quality product for our customers, and that's what we desire to do. So if we're just going for speed, are we going to be sacrificing quality? And the way that we think about it internally is speed is a tool that you can use to achieve quality, or you can use to achieve other things. So I think it's easy to conflate speed with, or just think of, when you think of speed, it's just about launching new products or secondary functionality. But if you're building software, or I don't know, maybe building other things, but I know building software. If your team is fast and efficient, you can use that speed to pay down tech debt. You can use that speed to make your product more reliable, to make it more performant, or to make secondary functionality. And like, I think the same thing like applies with creativity. Like if you talk to the folks on the team, like say our creative team that's like inside marketing, they are doing things at a fast clip. Like you're trying a lot of different things. It's not like they go away and they're like thinking for like 3 months and they're like, here's our one idea. That's not how that stuff works. And that's not how it works with improving a product. So that pace of change that you're alluding to, where we had like 12 product updates that we published and going to, I forgot what the number was, 70, 80. It's been a huge shift internally, and it is really, like Chris was talking about, the focus and focusing the whole team on pace of improvement, and that we really want to optimize for that overall else, and we are willing to trade. The things that we traded for that are internal consensus, like really great stakeholder management, really good comms plans. So some of those things we're willing to say there's going to be some stuff that is not going to go as smoothly. But guess what? If you are really fast, you can just correct it, right? You look forward and say, we made a mistake. With that, we launched something, it was like a little bit off. Fortunately, we work in marketing software. It's not, life or death for the most part. So if something's broken, you can fix it that day or the next week.
Yeah, that's, I think, like something that was hard for, I imagine there's companies that are always really fast and stay really fast, but for us, early years, slow, then we kind of figured it out, got really fast, but with one team, small team, high trust, really, really, really fast. And then the scaling got hard. Like, how do you scale this? How do you give the right ownership to different people so that they actually have the authority, the ability, the insight of the customer research, all the stuff, so that they can make very fast decisions about what they should be doing. And the truth is, it was extremely hard to do. And now that we've done it, but this thing that Brendan is saying, it's crazy how real it is, which is like, if you can just go really fast, you can fix a mistake really fast too. So failure is very different. We don't want lots of big failures, but actually some small failures is a good sign. Like, that's a good sign that we're actually going fast, and they won't sink us because we can address them quickly.
Right.
There's also there's a Steve Jobs quote, which is, creativity is just connecting things. And, I'd heard other entrepreneurs talk about this quote before, and it was Ben Chestnut, who is the CEO of MailChimp, who said this very specific thing. He said, the most important part of that sentence is the word things. And it doesn't seem like it makes sense. You'd think it's the connection, but it's actually things. If you have a lot of things, it's much easier to figure out how to connect them. And it's actually much easier to be creative. And so in a world where you're shipping all the time, you have a lot of things, you have a lot of stuff. And so then it's like how you combine the things ends up being really creative and really like innovative. And that part sometimes feels like much easier than like manufacturing it out of nowhere.
Beautiful. To be able to do this, right, your next level team, your leadership team would have structures, would have evolved over the years. How has it evolved, and how has your thinking also evolved over the years, the way you think about your leadership team?
I don't know if we could probably talk about this topic for like hours, because I think it is like, there's so many different levels and layers to it. I'm going to skip to like this very simple thing. One of my favorite memes is the midwit meme. Do you know that meme? It's like the distribution of IQs, and so there's like an idiot on the left, and then there's the midwit who's like 100 IQ, and then there's like the Jedi level on the right who's like 140. And often the way the meme works is like the idiot and the Jedi have the same idea of how to do something, and the midwit's the person stuck in the middle who like can't figure out what to do. And we certainly have gone through this on like, I think, building a senior management team and like management in general. And the thing that we saw at the beginning was, when we really didn't know anything, we just want to work with people who we think are really smart, that we really like spending time with. Like we work well together. And then somewhere in the middle, we overthought it and we like tried to hire too much for experience, too much for like previous experience at specific companies. It would be very hard to work with someone, and there's been many times where Brendan over the years were like, oh, this candidate come in, they do things completely different from us, but maybe that'll be good for us to get someone who's like completely different. And then it turns out like, yeah, they're a great person, but like the way they work is so different that it is like slowing us down dramatically or really problematic or really hard. And where we've ended up is this realization of like, the world is really big. There's a ton of great people you can find to work with. You should find people that you like actually want to spend time with and actually want to work with. And so when our senior management team has that vibe, that is like a huge amount of trust, people are much more willing to bring up issues. They're much more willing to give feedback to each other because they care about the person. And on the margins, like that stuff adds up. Like if I say something and it annoys someone on the team and they actually tell me that, I can adjust my behavior because like, and I want them to tell me, but if I don't have a close connection to them or isn't trust, they might just look as like, it's not worth it to say that to Chris. Like it's not worth the social capital. It's not worth like the pushback. But over time that erodes into a place where you have less trust. And so I think like the most important thing is getting a senior manager team that has very high trust and vibes of like honesty and integrity and all those things you would want on any great team, that can have fun together. And then I think like the recruiting is the other piece, which is we've learned over the years, like the best way to recruit someone who is a great fit is to have part of the interview process be as close to possible as what the job is actually going to be. So we include
compare and contrast.
Yeah, so it's like having the right project that someone can come into, and as much as possible, trying to convince everyone on the interviewing team, let's try to forget we're in an interview in this moment and actually pretend this person's on the team. We're working with them. Like, are we getting to the root causes of the things we want to get to? Do they have experience and intelligence that's like different from us that's going to help us make better decisions? Are they able to work the room if it's a meeting? Are they able to put together a full project if that's like part of their job? Whatever the thing is. But when we get to that place, it makes a huge difference in terms of the hit rate of the people, of us working out, but also the team working together.
I think the number one thing in there too that we have learned the hard way, and this is maybe, well, I don't know if it's specific to how we work, but in those conversations, finding execs who can talk in specifics, a lot harder than it sounds, because like people who have a lot of experience, right? Part of it comes with that is you can pattern match and you can talk, really fancy about generalities and things like that. And I'd say the folks that have been the best hires for us in those moments, like Chris is saying, where it feels like you're actually working with someone. If you're actually working and solving a problem, you have to solve a concrete problem, right? So if you can get your interview process to actually get into that versus like, this sounds right generally, or you're talking about some other thing. I mean, this is like pretty standard stuff, but it's been hard for us in exec hiring. Once we've done that, that has really changed the game for us.
Yeah, to say that in another way that we talk about it now is like, if they wouldn't be a world-class IC, like individual contributor, they're probably not going to be able to be a world-class manager. Because at some point, if your manager can't help you do your job on the ground, like you have a problem. And if they can, it allows that manager to, maybe they need to be mostly high level and thinking long term, like obviously that's the ideal. But a lot of times they're going to dig in on the specific copy on a page or the specific way a feature works or whatever. And if they can do that and they're actually really good at it, it changes so much. It makes so many things much easier.
Right, because one other one. Sorry, we have a lot to say. That got caught up in is if you're managing some team or function, right? Your job is to make that successful, ultimately. So you need to be pretty connected to the work and what's happening and like why you're doing it in the first place. There are some people who are like really exceptional people managers around, but maybe less interested in solving the actual problem there, and that's a trap that we've fallen into that hasn't worked for us, where when we get the people who are like the management of the people, they're good at it, and that's like a means to an end to like get a team working really well to solve a problem. That has worked better. And like Chris said, you need to be good at that function in order to do that successfully. At least we haven't seen the opposite of that yet.
Yeah, fantastic. Reminds me of a quote, which is delegation without review is abdication. Right?
Yeah.
To a large. And also, what surprised me was when I was reading this book, $1 Trillion Coach, about Bill Campbell. The first, it was about the coach and all the large companies and all of that. But the first chapter was dedicated towards how to be a good manager. The entire chapter was dedicated to Bill's conversation with various people about being a good manager. It was fascinating read, and I was surprised to find that in that book, which was about how do you run good meetings? How do you run a good one-on-one, right? What does it take to actually review good work? Like, and do you know the difference between good and great work? Right? And help your team out, right? It was fascinating. So much that you're actually telling is also about that, right? People who are able to stay close to the problem and can solve with the team. Beautiful. So I want to also talk about a little bit about the in your journey from way back in 2006, right? Your competition, right? So I think Wistia was founded 6 months after YouTube, and that's a long time to have tested your hypothesis a lot, right? Know what is working, not working. It is also amazing to be able to keep the energy level, right? And it goes back to something that you spoke about, which is finding that energy, purpose to be able to keep going and being able to enjoy this journey is something that you have done amazingly well over a long period of time. And I would love to hear your perspective especially around the way the market has evolved, your competitors have evolved. There is so much that has changed over the time. And yet, for us to be able to go in this journey where you are so optimistic about your future, you are clearly seeing a white space that others probably don't. Everybody else probably is seeing a lot of competitors. You are probably able to see a clear white space to say, that's our path. And there is a huge opportunity in front of you is what keeps you going. I would love to hear a little bit more about that perspective around how you think about competition, markets, and what gives you energy when you see the opportunity that is very different from everybody else.
You want to start, Chris?
Sure. First of all, I think you're right. Like, I think if you don't have that white space or you don't have that plan, that's when you get demotivated. So it's funny, but when we did the buyback, when we decided to do it, Brent and I were sitting there like on a loading dock outside of our building. We're like, we're going to do this. We're going to buy back control. We're going to take control of our business. We're going to get profitable. We were still losing $300,000 a month at that moment. And that there was like our time to live was limited because we had limited cash in the bank. You would think it would be very stressful, but the second we made the decision and we knew what we were going to do, we believed in ourselves and the stress went away and just went towards execution. So that thing that you just said is such a big deal for everybody. I think it's like always looking like, what is your plan? Do you believe it? And like, how do you find the white space for the opportunity? And then I think the thing I would say that's just like, our market's been really interesting to watch is, when we started, if a company wanted to make a video, it was very expensive. I remember some of the first like sales calls I did were with people who are like, this sounds cool, this way to privately share videos or whatever. Like, but like, we don't use video at work. That's like, I mean, what am I going to do? Spend 20 grand to make a video that's like going to go seen by my team? Like, we're only doing that if it's like a CEO message or whatever. And it was just like the cost of production and the technology around producing video made it expensive. And then over time that changed dramatically. Like it went from full like film and video production cameras to handheld DSLRs that could support video. And then that changed the game and brought the cost down of making videos. And then it happened with mobile video on iPhones and Android and the quality there. And then the most recent change has been the one that happened in 2020, where everyone sees their computer as a camera now. And so that's changed expectations again. And I think when we think about competition through all of this, it always just comes down to incentives. It comes down to how they're funded, what that means for what they need to do. Like we had a lot of early competitors because I think the opportunity was kind of obvious. It was like, hey, online video is finally here. The big question was, will there be more than just YouTube? And a lot of people thought there'd be more. So there was a lot of competition, but all of our competitors raised a lot of money. We didn't even know you could do that, so we weren't doing it. And then what happened is there was a lot of money. They built teams, they built sales teams. They tried to scale really fast. And actually that segment of like the business video space was not that big at that time. And so the companies that scaled really fast, they couldn't get the growth. They'd raised too much money. They had to sell their businesses for the most part. And then they sold them, gave up. They went on their merry way, and we just gobbled up the customers. And because we hadn't raised venture, we could be willing to be patient. And so that was a big differentiator for us. And then as the market got bigger and became more obvious, we had more competition in different ways. Vimeo became a major competitor. And for a long time, they were just a site for filmmakers. So, okay, Vimeo is starting to do B2B video stuff. But the challenge that they have and still have is like their core of where they came from was for filmmakers and creatives. And so they had to make a shift from filmmakers to B2B, which made the filmmakers upset. And then the DNA, I think, is just like different in that company around B2B. And they built a lot of really good stuff. They also acquired a lot of businesses. So they acquired about 20 companies and they went public post acquiring those companies. The challenge for them is that they acquired 20 companies and that they went public in, I think, 2021 at the peak of the tech stock market, and their stock price is down a lot. And so what does that mean? It means the incentives for the people on the ground are just really different. Like either they got the liquidity event or their options are underwater. They've had the big preference stack, which affected them before going public. Now going public, people are going to watch the stock price all the time. And so what that changes people's day to day is, where people are going to work and where are they going to stay, where they want to build a career. And then it just means that there's certain challenges, which I think exist in our market. They're pretty hard to solve. They don't have the same incentive to solve them that we do. And so over time, that ends up showing up in like a different business model, a different product, different employee model, a different go-to-market, all these things. And so it just kind of always comes back to incentives. And then the last thing I'll say, and Brett, we could keep talking about this forever, but is Brendan talked about the strategy change we made. And we saw, like before COVID, our strategy was like, okay, we are going to be the best damn point solution. So we are going to be the best video hosting management analytics platform that exists. We will integrate into everything else for you. And we thought that made sense because people would want to take us, they would take the best webinar tool and the best editor and the best yada, yada, yada. And then we listened really hard in COVID as things were changing. And, as I said, people saw their computer as a camera. And we started to see this consistent story of people telling us, like, I don't want 10 video tools. Like, it's annoying. Like, to keep up with all of these different things and going to all these different interfaces. Like, I want one. I want one I can trust. Or maybe I want 3, but I don't really want 10. And so that convinced us, we heard enough of that. It convinced us we should change our strategy. And then we looked at the market and nobody actually had taken the approach of trying to do this, but trying to make it so easy to move between these different elements that someone would expect in a video platform. And it's a very hard thing to build by acquiring because inherently of different teams and tech stacks and interfaces. And so there's a lot of things we can do. Like you do a webinar in Wistia, the second it's done, it's recorded in Wistia and it shows up in your account. Why does that matter? Because you can hit the editor, you can trim out bad parts of it, you can make clips from it, and then you could directly publish it. And so that one little workflow might save you a few hours if you're using different tools. And you multiply that by all the different workflows and all the different tools, and it starts to add up to make like a really big difference. And so that's kind of like we saw that opportunity and went for it. And the interesting thing I think is like that it just came from customers again. And so that's the mistake that people make, is that they don't stay close enough to what their customers actually want. Or they rely too much, I think, as you get bigger, just on the quantitative data and not enough on the qualitative. That's how you can make, like, I think, the bigger strategic mistakes when it comes to competitors.
And now I understand why you said, I think somewhere I read, you said different customers assign different values for the same platform. Which is when you are actually sharply focusing on a B2B marketers as a persona, the value they assign to their time, right, and to be able to publish is
Yes.
very different from what an indie maker would actually assign value to that, or a hobby person would actually assign that same value to the same process.
Exactly. And I think that also there's a recognition of like the indie maker may become the B2B business
Correct.
later, right? And so
Right.
like we just don't know, but it's where people are on their growth journey is what you want to think about in terms of like what is their maturity with the problem versus like even what size business is it? That's another really interesting thing we can get into, but
Fantastic. What is it that has surprised you the most, both of you? This is the last question. I know we are up on time. I want to make sure that we are closing with some thoughts on what has surprised you in this 18-year journey. 17-year journey?
about to be 18, yeah.
Yeah.
Right.
I mean, one that we touched on earlier is around product momentum. I feel like Chris described this. We had this, you struggle in the beginning, and then if you're, on a path to success, right, you figure that out and you figure out how to start shipping quickly and shipping things that customers want, and you can like achieve product market fit. What was surprising is like, you can lose that, and you can lose it. And if you're in SaaS, you can still grow for a very long time and not realize that you've lost it.
You've lost something.
And I feel like we had a number of years, like we talked about some of this with the overscaling and that, where we were like effectively lost in the woods on that. And like the signal to us didn't really show up until a lot later because the business is still healthy and growing, right? And like it takes time to shift perception in the market. It takes all these things take a long time. And then the other thing that's surprising is how hard and how much work it is to build great software at scale. Like that's been a humbling experience. Like we're super psyched right now that like we have started back on this path and like we're shipping a lot faster and the product is getting faster. And I will say it gives me a lot more respect for really enormous companies who make great products. I think when we were really small, I was like, look at these, these big companies, they have no idea what they're doing. And like, there's plenty of that, obviously small companies have advantages, but it's challenging to make great product at scale. Like that shouldn't be surprising. I don't know, but that has been a pretty surprising.
It is definitely a light bulb moment for sure. Yeah.
I was also surprised by the things that Brendan just talked about. I'll talk about a different one, which is, you said this, we've been doing this for almost 18 years. And pre-COVID, we kind of thought our market was mature. So what I mean by that is like the feature requests that they give us are like different. They're like more in their specific analytics, like requests and all these types of things. We just kind of thought our market was mature because we'd been at it for a long time. And the thing that we missed was that like the market doesn't care how long we've been at it. And I think it's a very easy thing to see your journey as your company as like what's actually like the central thread of the story, and it's not. And I actually think our market today is more early stage than it was when we started.
Beautiful.
There's more people today starting with video than ever have who are trying to figure out this stuff and want a lot of the things that we do. And it's funny because some of these messages, we've been putting into the market for like 14 years. So it feels so old to me. And I'm like, how could this possibly be the thing? And yet, if the market is today bigger, more vibrant, more change, more willing for people to adopt and try these things, like this is the moment to put it out there. And I just think that that's like a mistake that's and a surprise. It's very easy to make as an entrepreneur is to see your journey as like the journey of the market. And the truth is like the market doesn't care one lick. That doesn't matter at all. You give them a better product, they'll switch to something else. Give them a better brand, they'll pay more attention. And that's also why like staying back to these like fundamental things, I think is just so important.
Beautiful. And I think the most important one is in almost every category, there is so much opportunity than we are able to see at a particular point in time. And winner take all is also a myth because the more closer we look, the market opportunities just seem to expand more and more because we just start looking at things very differently, much more closely. Right? Awesome.
That's like whenever I talk to people outside of tech, that's my barometer for where the market's at is like you talk to people who don't work in tech and you ask them about tech products and you'll find my experience, many of them know none of them at all. And yet we know tech is still changing everything. And so
Saturated
like
it is.
it's trying to understand that is like really helpful to figure out like if they all know the thing and they're all already doing it, like yes, maybe it's mature. But if they don't, like you should look at that as a signal and ask yourself a question like, will their markets be changed by this too? And if it is, like then you have a better sense of where you're at.
Sure. That's a profound lesson. Thank you, Chris. And thank you, Brendan, for taking the time to speak with me. Right. Really appreciate it. This was fun. Thank you.
Thanks for having us.
Thank you so much for having us.